Hello everybody, this is Lara from pureelliottwave.com with a free analysis for you. I'm going to have a look at Eurodollar, a currency that's not a cryptocurrency. It's been a long time since I've had a look at any of these currencies. I used to analyse the Eurodollar and pound dollar on a daily basis many years ago when I started with forexinfo.us. And I am currently training a new analyst. I hope that he'll be ready to join me early next year, January, February next year. In order to know what market we should be focusing his training on, I need to ask you a question. What new markets would you like me to offer on a subscription basis? The markets that I currently analyse on a subscription basis are the S&P 500. I do that every day for my membership at pureelliottwave.com. And then once a week I'm doing gold and oil, US oil, and Bitcoin. So I'm going to continue to cover the indices, well, the S&P 500, and the major cryptocurrencies, and I'd like to expand and cover some more cryptocurrencies. If we're going to expand, what else would you like us to offer on a subscription basis? The bonus of subscribing to the analysis is I have to do it for you every week. So if you're paying me to do it, it will get done every week, and I'm very consistent. So I need to ask, pick one. Which one do you think we should focus my new analyst in training on? One of these or something else? Let me know. And if you're going to do the other, please be very specific. Okay, let's get into analysing the euro. This is what it looks like at the monthly chart level, and then we've got this bear market continuing down here. From this low to this high, I would start my Elliott wave back down here at this low. This looks like a three-wave structure, probably W, X, Y. And so if that's a three-wave structure up, you would expect that it's a five-wave structure down, except there's a triangle in here, so you can't count this 1, 2, 3, 4, 5 for two reasons. You can't have a triangle in a second wave position, and 4 would overlap 1. So from this high on down, this looks like a double zigzag. I'm going to start my Elliott wave count up here actually, because the whole thing, the bigger picture, could be some kind of expanded flat, but I think we need to have double zigzag in here, and I'm going to make it cycle degree. It should be W down here, X here, and Y. Yeah, that's better. And now the triangle is in a B wave position. Let's get some labels for this triangle in here. I want to see if the triangle trend lines converge. They should. That actually looks okay. That looks like a reasonable. This is a running contracting triangle. It's a running triangle because B moves beyond the start of A. It's contracting because C doesn't move beyond the end of A. D doesn't move beyond the end of B. E doesn't move beyond the end of C, and the trend lines are converging. So that's a running contracting triangle. Contracting triangle is the most common type. And so now we can see this wave down here is A, that's an impulse, and this wave down here is C, that's an impulse. Now this X wave, this looks like an expanded flat, looks like a pretty good one. Nope, B has to be over there. So now B is a three-wave structure, looks like possibly a double zigzag, but I'd have to check that at a lower time frame. And now C looks like a really good five-wave impulse. That looks pretty good. So now we've got W lasting 80 months. So W lasts 6 and 2/3 years. So cycle degree waves should be expected to last from 1 to several years. So just under 7 years is definitely several. Longer than 1, that absolutely fits for cycle degree. Wave X, just over a year, fits for a cycle degree wave. Now let's get some labels in for Y. I think we can see A and B complete, and now it's in C. So we need to expect to see a complete structure for C. So I need to focus on how is C subdividing. Oh, this looks like a pretty good impulse. This is monthly chart though. I need to check lower time frames. Yeah, that looks pretty good. Okay, let's save this and bring this down to weekly. So base it on this. I'm only going to do Elliott wave analysis. I'm not going to do classic analysis. I'm going to focus on primary C. Oh, what is this? Oh yeah, I think we can probably see A as a complete 5-wave impulse. No, I think, oh, would we see some kind of... No, I think 4 is a triangle. Will we see some kind of ending diagonal in here for the 5th wave? Let's just quickly see if that might work. An expanding diagonal. Yep. 3 is longer than 1, 5 is longer than 3, 4 is longer than 2. The trend lines are going to diverge. That looks actually really good. And now B looks like a double zigzag. Oh, I don't know about that. Oh no, that could fit. Okay. Okay, let's focus on C now. Primary wave C from this high here. The end of primary B. Let's snap that in. Primary C. I don't think I'd want to put 1 and 2 anywhere else. I can see a nice impulse for 1 as well, actually. No, I'd put 1 here, 2 in expanded flat, 3 over here, and 4 over here. No, see, 4 does not overlap wave 1 price territory. The high for 4 is 1.9885, and the low for 1, 1.205. 1 is higher than 4. There's no overlap, but 4 is overlapping wave 2 price territory. The rule is clear. Wave 4 should not overlap wave 1. And the rule is met. So when that motive wave does that to me, I do this. I ignore that. Okay, I think we can see a 3rd wave over down here. But the devil is going to be in the detail. We need to make sure that that 3rd wave is complete. I think I'd want to move this here. And I think I might want to put this here and this here. So I think I can see an impulse for 1. Yep. An expanded flat for 2. And I think we're going to have no problem seeing the 3rd wave complete here, but oh, no, you can't have this because this low here, 1.03593, and this high, 1.036. No, there's an overlap there, so I think this has to be down here. And I think, can we see 1 over here? Yep. And now is the 3rd wave going to fit? Yes, it will. Okay, let's check that at the daily chart. Let's save this. And now from this, I've gone monthly, weekly, now I'm going down to daily. I'm going to check this 3rd wave. Okay. So intermediate 2 ends here. Oh, okay, well we're going to have to put this up here. And I think we'll have to pull this down here. This is not going to be a problem, I think. I think we can put this down here like this. And now this is going to fit. Yep. And so minor 1 will end at this low. Well, actually it could end at this low. And then minor 2 is an expanded flat. Just checking that C moves beyond the end of A. Yes, it does. Avoided a running flat, which is an extremely rare structure. Minute A is a flat. Minute B is a zigzag. And minute C will subdivide as a 5-wave structure. Minuet 1 here, minuet 2 here, minuet 3, minuet 4, and 5. That's going to be no problem. A zigzag for minute 2. I just want to check that this is going to work as an impulse. Yeah, this is going to work. I think I would actually pull this down here and see brief shallow 4th waves in here. Sometimes the euro can behave a little bit like a commodity. Is this gonna... Yep, that fits. Although I think micro 4 probably some kind of combination in there. The third wave here, no problem with that. Fourth wave, no problem there. Fifth wave, I don't think there's going to be a problem here, but let's check. There might be an overlap. No, there isn't. No problem there. Oh, interesting, an extended fifth wave. I think you might want to see the third wave over here and the fourth wave an expanded flat. Yeah. And so could be an intermediate 4. I think that would be my short-term conclusion. So going back to this, yeah, I'd say intermediate 3 over here, intermediate 4. So where is the invalidation point? It's down here. Let's also put a channel around primary wave C. Get an extended channel. I'm going to use Elliott's first technique from 1 to 3 and then push a parallel copy up on 2. Ooh. Now it's not containing all of this, so I'm going to push this copy up a little bit further to contain all of this. And that's a rather conservative channel, so I would expect that to contain it. Extend this out so we're filling the space. And I want to draw a Fibonacci retracement along the length of intermediate 3 so that we can have an idea of where intermediate 4 may end. It may end at the 0.236 Fibonacci ratio, which is 1.01806. So my conclusion will be a little bit more of a bounce somewhere up here, and then a resumption of the bearish movement for the final fifth wave. This is really hard because when cycle wave Y is complete, then this market, the bigger picture, it could just cease to exist. Because if you start this is really confusing. If you start the Elliott wave countdown here, let's bring in cycle degree as well here, and you have either WXY or you have A, B, C, which will actually fit with B an expanded flat. No, not like that, like this. Now you've got a correction up, single zigzag up, a correction down, and a movement that starts with a 3, 3 is then followed by a 5, or it's a huge triangle. So this is only one of two things. The bigger picture is only a flat correction or a triangle. So it's super cycle degree. If it's a flat correction, then you're looking at A is a zigzag, B is a zigzag and must retrace a 90% correction of A, and then C should move beyond the end of A. So that's your first idea. Or at the monthly chart level, oh yeah, there it is. Okay. The other idea is a triangle at super cycle degree. And so you're looking at A is a triangle, is a zigzag, B of the triangle, C, D, E, most likely contracting. Let's put some trend lines in so this is obvious. So if we start the Elliott wave count here, one of two things could be happening for Euro. It's a huge triangle or it's a flat correction. So here's a flat correction, A, B, C, or a triangle, A, B, C, D, E. Now if it's a flat correction, then supercycle B has to be a minimum 90% the length of supercycle A. A flat is labelled A, B, C, and it subdivides 3, 3, 5. A triangle is labelled A, B, C, D, E. Within a flat correction, supercycle B must retrace the minimum 90% the length of supercycle A. So I just calculated that at 0.67122, so about down here. So it has to move below this point, which is 0.823, it has to break through support there and maybe find support here or a little bit below. This is the low in 1985. Or a triangle, there's no minimum requirement for supercycle B. Now the shorter term picture sees a double zigzag, W, X, Y unfolding lower. At the weekly chart here, we're looking at the end of Y with A, B over there, and C unfolding lower. And the daily chart, we're looking at possibly intermediate 4 could be over, but I think it's probably more likely to continue a bit further overall. So that's my conclusion for Euro. Very, very difficult wave count, and this is one of the ones that I'm doing it today so that my analyst in training can have a look and see what I would come up with. And I haven't looked at the Euro for many years now. This would be my big picture wave count, and that would be my detail intermediate 4 and complete, to be followed by intermediate 5 down. So I've covered this because we're thinking this might be the market he'll start analysing for us next year. So I'm going to bring you back to this question. What do you think we should expand to focus on a subscription basis? Euro, dollar, pound, dollar, yen, Dow Jones Industrial Average, transportations, or NASDAQ? Or do you have another idea? So if you could click through and answer that question for me, that'd be great. Thank you very much.